Welcome friends, I hope you are doing great. Here, we will talk about some startup updates from last week of March 2023.
First up in the news, we have sad news coming from Unacademy. Unacademy lays off 12% of its workforce and also restructuring its current business to achieve profitability and eyeing towards IPO. EdTech company Unacademy has fired 12% of its employees, according to an internal memo sent by CEO Gaurav Munjal. With this, the firm has let go of around 1,500 to 2,000 employees in the past 12 months. Gaurav Munjal said, "We have taken every step in the right direction to make our core business profitable, yet it's not enough. We have to go further, we have to go deeper. Unfortunately, this has led me to take another difficult decision. We will be reducing the size of our team by 12% to ensure that we can meet the goals we are chasing in the current realities we are facing," in a note to all employees as explanation to this mass layoffs. The restructuring includes Code Chef, competitive programming platform for students and professional programmers, will be hived off from Unacademy Group and will now function as an independent business being run by its current team. The company also shut down its K-12 learning platform Mastery. The Unacademy Group, which comprises Graphy and PrepLadder, claims that it has a network of over 91,000 registered educators and over 99 million learners. Amid rise in expenditures, Unacademy has done several cost-cutting measures. In September, Munjal said that the firm is eyeing profitability by early 2023 and is also looking for an IPO in the next 2 years. The company recently claimed that its SAS-based edtech platform Graphy turned operationally profitable for the month of December 2022. Except PhysicsWallah, all edtech unicorns including Bujus, Vedantu, and UpGrad are in deep loss as of fiscal year ending on March 31, 2022. While these companies are chasing profitability, it will be interesting to see their turnaround story in the coming months. Second up in the news, we have recent funding round from UpGrad. UpGrad raised 300 crore rupees from existing backers with goals to expand its presence in offline higher education space. EdTech platform UpGrad has announced that it has raised 300 crore rupees, from which co-founder and chairperson Ronnie Scrivella invested 212 crore rupees while existing backer Temasek infused 81 crore rupees. The rest came from other minority stakeholders. This is the first fundraise of the Mumbai-based unicorn in 2023. It also announced its strike into the offline higher education space in November and said it was investing 246 crore rupees to set up 10 global campuses across India, the United States and other regions next year. UpGrad's portfolio includes Harappa Education, Examper, Talent Edge, Study Partners, Work Better, Knowledge Hut, Import Us Innovation, Recruit India and others. The company is focused on its organic and inorganic growth across multiple verticals of formal education via degree, diploma, and doctorate courses in partnership with the best universities. UpGrad is also focused on a large segment of skilling, short certification courses, boot camps, and job-linked programs coupled with the fast-growing sector of study abroad. The company claims to have completed 22,000 placements in FY23. UpGrad has now raised over $600 million to date. In August last year, it raised $210 million from ETS Global, Bodhi Tree and Singapore-based Kaizen Management Advisors at a post-money valuation of $2.25 billion. Third up in the news, we have fire sell-off of GoMechanic. Embattled GoMechanic acquired by lifelong group-led Servizzy. Car servicing startup GoMechanic has been acquired by Servizzy, a consortium led by the Lifelong Group. This comes months after GoMechanic laid off 70% of its workforce as the co-founder Amit Basan acknowledged lapses in financial reporting, creating much furor within the startup community. These lapses were reportedly discovered during due diligence by EY. GoMechanic was in talks with SoftBank to raise fresh capital. The co-founder had then said third party will now conduct an audit of the company's business, which wasn't seen as happening. Lifelong Group said, due to the recent financial difficulties at GoMechanic, the board and shareholders with support from Stride Ventures initiated a speedy and widely publicized sale process to ensure the continuity of business, in a recent press release. The Servizzy consortium, to be led by the Lifelong Group, emerged as the strongest bid in this process for the acquisition of the GoMechanic business in accordance with terms and conditions contained in the agreement. The Lifelong Group expressed optimism that the deal will help in preserving the ecosystem at large and offer a new lease of life for GoMechanic, which continued to operate 800 workshops and service 30,000 vehicles in January despite challenges. Founded in 2016, GoMechanic was backed by several marquee investors, including Sequoia Capital and Tiger Global. In June 2021, the company raised $42 million in a funding round led by Tiger Global. While the Lifelong Group, incorporated in 1985, pivoted to auto component manufacturing in 1995. The company also deals in medical devices and e-commerce spaces. It claims its annual revenue has grown from $0.5 million in 1995 to $175 million now. Some of its top customers include Hero Motor Corporations, General Motors, and Arvind Meritor among others. That said, it's indeed a new lease of life for GoMechanic, which hit headlines in January for all the wrong reasons. Next up in the news, we have Bijnis burning almost 4 times more money to generate revenue. Bijnis spent 89 crore rupees to make 25 crore rupees from operations in FY22. B2B marketplace for the unorganized retail segment, Bijnis witnessed around 2.8x growth during the last 2 fiscal years. However, the firm bled profusely as its losses were more than double of its operating scale in FY22. Bijnis is designed specifically to cater to the needs of the footwear industry. It helps enterprises in the segment to connect and communicate with each other and expand their businesses. It connects manufacturers, suppliers, traders, and retailers of the footwear industry. Bijnis revenue from operations surged 57.9% to 25.12 crore rupees during the fiscal year ending March 2022 as compared to 15.91 crore rupees in FY21. On the expense front, employee benefits turned out to be the largest cost element, forming 50% of the total expenses and jumped 3.5x to 44.52 crore rupees during FY22. Akin to the higher cash burn, losses of the company deepened by nearly 3x to 54.6 crore rupees against 18.34 crore rupees previous year. On a unit level, Bijnis spent 3.54 rupees to earn a rupee of operating income during FY22. Bijnis has now raised around $43 million amounting to 322 crore rupees to date from InfoEdge, Matrix Partners, Sequoia, Westbridge, and others. Following its Series B round of $30 million in September 2021, it was valued at around $190 million amounting to 1,425 crore rupees. Fifth up on the news, we have Fashinza securing $30 million from Mars Growth Capital and Liquidity Group. Fashinza, B2B marketplace for global fashion supply chains, has secured $30 million in working capital funding from Mars Growth Capital and Liquidity Group. This is the second funding round for the Gurugram-based company in the last 12 months. The company said in a statement that this funding will help Fashinza's ongoing transition into a global business with significant operations in the USA, Gulf, and Europe. With this, the firm has scooped up over $150 million in risk capital in the past 2 years. While the company did not disclose its valuation in the new round, it was valued anywhere between $300 million and $350 million during the last round, according to Intracker sources. The company claims that it has a roster of over 250 factories that currently serves more than 200 brands across 5 countries, including US, UAE, UK, and India. Launched in 2020 by serial entrepreneurs Pawan Gupta, Abhishek Sharma, and Jamil Ahmed, the firm counts Nykaa, Forever 21, Noon.com, First Cry, The Sold Store, and BevKauf.com among its customers. According to its annual financial statement, Fashinza had demonstrated strong financial performance in FY22 with tight control on expenses. While its revenue surged 2.4x to 30.66 crore rupees in the last fiscal year, the company's losses reduced by 15% to 5.36 crore rupees in FY22 from 6.31 crore rupees in FY21. It will be interesting to see its growth strategies as Fashinza indirectly competes with Wadon's fashion vertical and Flipkart Amazon's wholesale businesses. Sixth up on the news, we have Bajaj Finance facing backlash over excessive pesky calls and messages. People are extremely frustrated and annoyed by unsolicited calls and messages from Bajaj Finance and are sharing their ordeal on Twitter. Dr. Prashant Mishra tweeted, "Russia-Ukraine war can end, but calls from Bajaj Finance will never end." Ashok Mishra briefly ran a campaign sorts urging people to tag Sanjeev Bajaj, Bajaj Finance CMD, to help block what he described as unlimited inconvenience his telemarketers have caused to common citizens. The brouhaha over its aggressive telemarketing might be the first of many indicators that growth is peaking, or it simply needs to find a smarter way to sell soon. According to Truecaller, India was the fourth most affected country by spam calls in 2021. Brazil topped the list, followed by Peru and Ukraine. Seventh up on the news, we have Paagar-Book burning excessive cash to show its growth. Paagar-Book spent 16 rupees to earn 1 rupee in FY22. With around 5 crore rupees in top line and 69 crore rupees losses at the end of fiscal year ending March 2022. Let's look into its FY22 numbers. Paagar-Book's revenue from operations skyrocketed to 4.55 crore rupees during FY22 as compared to 11 lakh rupees in FY21. The rise in employee cost was steered by a nearly 5x surge in ESOP expenses. For background, they laid off almost the entire sales and marketing team of around 80 employees in July 2021. On a unit level, Paagar-Book spent 16.5 rupees to earn a rupee of operating revenue during the year. Founded in 2019, Paagar-Book is a staff salary, work, and attendance management app for small and medium enterprises. It helps merchants to handle employee-related tasks in a single app that synchronizes across multiple devices in real time. It offers apps across 10 local languages and claims 80 lakh registered SMEs on its platform. Paagar-Book has now raised over $28 million to date from Sequoia, Silicon Valley Bank, India Quotient, among others. After its latest fundraise in June last year, it was valued at around $101 million, amounting to 735 crore rupees. Next up on the news, we have the thesouledstore, who raised 135 crore rupees from Xponentia Capital and others in Series C round. The thesouledstore said in a statement that they will utilize the fresh capital for expanding into new categories and launch over 100 stores pan-India within the next 2 years. The investment will also be used to offer a buyback of 100% of vested employee options. The company, which has 5.5 million Gen Z and millennial customers, further added that 60% of its revenue comes from outside the top 10 cities, and the new offline stores will deepen its presence in Tier 2 and 3 cities. It aims to reach 1,500 crore rupees in revenue over the next 3 years and then go public. The platform claims to have partnered with over 150 franchisees, and its product portfolio includes t-shirts, mobile covers, badges, boxers, notebooks, mugs, and umbrellas, among others. It also enables its users to create personalized t-shirts as well. Previously, the decade-old firm had raised 75 crore rupees, amounting to $10 million in its Series B round led by Elevation Capital in August 2021. The company was bootstrapped for the initial 5 years until receiving seed funding from RPSG Ventures in November 2018. Next up on the news, we have MamaEarth putting its IPO on hold. Direct-to-consumer skincare and beauty brand MamaEarth has reportedly delayed its listing plan due to weak market conditions. With this, the Sequoia-backed company will join the likes of Snapdeal, MobiKwik, Farmeasy, Drum, OYO, and Boat, which have stalled their plans to launch IPO despite filing their DRHP with SEBI. According to a report, differences over valuation between the company and potential investors along with poor market conditions have forced the company to put the listing plan on hold. MamaEarth said that they are still engaging with SEBI on DRHP and awaiting formal approval for the same. Post the approval, as is in line with the regulations, we will have 12 months to file RHP and take the company public, which we will do in consultation with our bankers. On December 29, Hanesa Consumer Ltd, the parent firm MamaEarth, filed its DRHP with SEBI to raise funds through an IPO. The company was the first unicorn of 2022 and also became one of the few startups that filed DRHP after achieving profitability. Thank you for watching this till the end. If you get some valuable knowledge from this, please don't forget to like, share and subscribe our channel, and we promise to bring amazing content to you every week.
Jai Hind.